Good morning, it's Harvey Jackson. We're just going to go through a few different news topics. Most notable for canola growers is the NOPA Veg Oil stocks. Karen Braun posted this yesterday, and as you can see here, 47% of the corn is harvested and 67 is harvested on soybeans. And the other notable thing is how much is planted in the winter wheat growing area. So in this graphic, you can see that it's as far as soybean harvest, it looks like it's about the best ever, and we're approaching the same kind of a scenario on the corn harvest as of the date in the last, let's call it 8 to 10 years. So the name of this video is more conducive to the veg oil, and where the NOPA came out yesterday, they actually were saying how low these veg oil stocks were on a month by month basis. So that September was down to just over 1 million pounds. So that's obvious, telling us that there's a really good uptake of feedstocks going into the renewable biodiesel programs, and that's all good for canola at the same time. Brazil, most notable, that came out on their CONAB estimates yesterday. They actually suggested that there's going to be 166 million metric tons of production of soybeans. So they are by far the largest grower of soybeans. And if there's going to be anything that's going to stop the market from going up, it's going to be the Brazilian corn or Brazilian soybean production number. And they are getting even more significant in the corn number as well. So if you're looking for a China supplier, they are number one, and then the residual supplier could be the U.S. because they have the stocks there as well. What I want to point out here is so this is USDA estimates, and they're suggesting that we're going to grow 20 million metric tons. Even their StatsCan is only saying 18.9, and what even with the numbers that are put here, they're saying that there's going to be 3.092 million metric tons carry out. StatsCan with best guesses on production, I'm saying that there's going to be close to 12 crush if that works, and 7.1 exports, and there could be some shifting around to those numbers. But I'm suggesting that there could even be a little bit lower yields on the canola than even the USDA said, and it would push us into ultra low. So there would actually have to be some shifting around. Probably crush will have to go down, or exports will have to go down, and that's what I've been trying to demonstrate in a lot of numbers that we've been talking about the last few months. But you can see the what if scenario is actually going to push production down below the 18 million. USDA is down here, and you can see who is the countries that have supplies or ending stocks. Canada is number one, and then China with their stocks at number two, and then European Union with very low stocks, and in India and United States with lower stocks as well, carried over from one year to the next. Let's just get into the weather. There's lots of high wind and winter storm warnings going into the U.S. But when we look at the actual dryness for this next week, so if we're already at 47 and 67% harvested, we're going to even get a lot more done if this weather actually holds here as well. Brazil, so this is GFS showing weather, and it looks like there's going to be some significant weather to probably spur on their planting. They are a little bit delayed right as of right now, but they will be picking that up. So on the market side, canola is up today 5 to 6, and rapeseed is only up 2.5. Soybean oil up 0.5, but it was up yesterday. Palm oil is up 63 ringgit on November or December contracts. Crude oil slightly down, close to $70 a barrel, and soybeans up, and wheats are basically down or basically flat to only down a couple pennies. Canadian dollar is slightly up. So let's just get through it here. Canola, and I'm starting to show the January contract as it's got the most volume and open interest. Let me know if you want me to maybe focus on November, but those two contracts are rolling over, and there could be some skewed November numbers as you see. But what I want to point out is on the short term downward move, we tested the 38.2, and looks like we're going to hold right there, hopefully. But we'll see how that all plays out. What's interesting here is, even looking at November to November, and again, I just said that I was going to, look at January as a front month, but just looking at this, let's call it $25 differential in price, which is significant when you start looking at the forward curve. So that's what this is called, of course. And what that means is just how is the market structured, and it's structured with a fair bit of carry. In a lot of instances, it's like 70 to 80%. So it would definitely pay for your interest costs to potentially push some of this, uh, but depends on the interest cost, of course. Uh, so we looked at the front month, now looking at the November of 25, and this is kind of the range 650 to 655 would be the 76.8 retracement value, and that would be a good place to maybe get a fraction of your sales made there. When you look at the soybean oil, it's actually trying to hold up on this downward retracement value of 38.2. But you can see there's a lot of choppiness here and going sideways. But we've got a little bit of green on the screen from yesterday and a little bit more today. So the NOPA number might have helped there. Palm oil still very strong at the 76.8 retracement value. Would like to see it get up to the 100 or better, and that would make us even more bullish, of course, with that support from those other countries in that oil complex. West Texas has broken down, and and that's a lot of related to the Middle East conflict. If there's a slowdown on that, which there seems to be at this moment, but at this point, I would say anything can happen there. Retaliation will lead to more retaliation, so there's a very good chance that that's still going to keep going that direction, depending on how this secondary wave of retaliation goes. Soybeans, it's been on a long slide going sideways and down. We breached the 23.6, looking to approach the zero retracement value, but the other important place is trading below 10 on the November contract. The Canadian dollar looks like it kind of stabilized a little bit yesterday, but both sides have unchanged really today. Wheat, 23.6, it seems to be holding up on the December contract for Minneapolis wheat. So right at this 607, 618 or 615, sorry. So if it can hold there and trade above, that would be great. As a retracement, we wanted to get above that 38.2. Holding up on the Chicago as well, but not on the Kansas. The Kansas is broken through and approaching, your longer term retracement value. So your 50-day moving average is down here. Milling wheat between 38.2 and 23.6 retracement value. So some support down here, but I'd like to see it actually trade off here. Corn is bouncing off of the previous low that it's made at the 401 kind of area. So look for some support there. And that's all I have here today.